Harry Dent here for the Rant on Friday, December 27th. Well, folks, I have never seen the markets more confused, ambiguous, like just aimlessly going up is the best description. And I do think that 2025 is going to finally be the make or break year. And obviously, you know my bias. I think things are going to break. This is still by far the longest bubble in history, going on 16 years. The longest bubble activity has been 5 years, and the longest total bull markets without a recession or a major correction has been 10 years. Okay, so this really is unprecedented, and of course we know why. $27 trillion of stimulus, and still, again, they may have cut back the monetary, but they're still going full blast on running the deficits, and that's been 70% of this 27 trillion stimulus over 15 years. So again, everything's unprecedented about this. There is no way to compare this to history. The only thing I would say slightly is the first Mississippi and South Seas bubbles, okay? Because those were government sponsored. They didn't have a stock market back then, by the way, but these were the first stock-like ventures which were kind of backed and promoted by the government. So when the government gets involved, that's when it gets perverted. And those bubbles went up dramatically in about 2 years and right back down, and 99% in that case. So again, the one thing we know, not just longest bubble, greatest bubble, but government played 100%. I mean, this is 100% artificial. And although we don't have a precedent, it does say it's gotta not be a good thing. Okay. Now, one of the things I'm looking at coming into 2025, and again, I think my past research has shown that the first crash of a major bubble tends to be 28 to 50%, typically more like 42% on average. And I think this one, being the magnitude it is, got to be in this 42 to 50% range. And when I look at the charts, that'd be like the perfect place to go down to in 2025, just for this first wave. So remember, I mean, we're going to see 3 waves of crash with bounces in between, a typical major wave down, okay? So this is just the first wave, and I don't see why it wouldn't be at least 40% and as much as 50%. So again, I know this is difficult. It's hard to wait this out. It's hard to miss some gains here at the end. And people are free to stay in here and play the games as long as you have a quick trigger, okay? So I'm also seeing some nice big round targets, okay? Bitcoin broke the 100,000 barrier. That's a big deal, okay? And it's consolidating around there, 92 to 108, okay, right? 8,000 both sides of that, so 100K, big target hit. The Dow finally broke above 45,000. The Nikkei in Japan, 40,000. I'm the only guy that ever mentioned 40,000 for the Nikkei way back. It just took longer than I thought to get there. And then the DAX, the lead market in Europe, and the NASDAQ here, kind of our lead kind of tech market, have broken 20,000 recently and are consolidating around here. So again, this is an important place, but it's also a really good place to top. And again, I know government's fighting this, again, but they've been fighting it for a long time, and they did tighten. And another thing I'm looking for, the crash starting sooner than later, is that tightening that they were forced into after over-stimulating with COVID. That should still, on a 1.5 year lag, hit into at least late January or first quarter or so, okay? So we still have the tightening in effect. So this is the best time to start this. But again, if it is the major crash, I think, a major bubble burst, which it should be, that first wave, 40 to 50% is a very good assumption. This is not Pollyanna, it's not exaggerated, okay? And again, the Fed is still net tight. They took it up 525 basis points. Again, biggest rate hike in over 40 years, and dropped the balance sheet 1.8 trillion, okay? Now that was from being way over, so it's still not, it was 900 billion coming in before they started raising stuff. But still, major tightening, okay? And they're still at 425 basis points, down from 525, and neutral, by best guess, would be about 300 basis points, okay? Kind of a long-term 2% inflation rate and 1%, premium on that. So they're still net tight and for a long time here, okay? Now, why? I've been looking at why is the economy so resilient after such a big bubble? I mean, bubbles make it more likely to burst and fall apart. Well, the best answer for that is that the millennial generation, the Generation X, after causing this long 2008 to 22, 23 slowdown with fewer and fewer people moving to peak spending, again, something I predicted all the way back in the early 80s when I started forecasting, that's the reason for the economy holding up. And the Fed doesn't know that. So I mean, we may even get to a point here where if inflation, which has come down to 3% fairly easily with the tightening, it's stalled there. We can all see this. They cannot get it to 2%. And they've made a big deal about this 2% target, so they can't just back off of this. And I think that's the stalemate here, and that's the rub that's going to tilt this thing into a stock downturn and an economic slowdown. And once it gets enough momentum, which is also key, there's going to be no stopping this, because that's the problem with bubbles. They go way up, they get to extremes, they also crash in half the time, and also very extreme and are very hard to stop once they start. We're not at that point yet, but that's what I'm hoping happens in the first half of 2025 as we go into this first crash, and then the Fed starts losing credibility and there's no way to stop this thing past the point. So 2025, I think, is the pivotal year. I do strongly feel it's going to end up down. And so this first wave is going to be very, very scary for a lot of people, because you got to remember now that one of the reasons the market's been so complacent so long, they have fully assumed the Fed has our back. Now, and not just the Fed, the government's going to keep running huge deficits. The Fed's going to be there, and they're going to stimulate as much as they need to keep this thing going down. And it's not just us, Mario Draghi and Europe and all this sort of stuff. So the markets have gotten this, and so this has to be dispelled, okay? So again, I still think the best thing to do here, people can be in if you want, just have a tight trigger, but I think it's best to just be safe here, and let's see what happens in the first quarter. Also, new book out. I recommended Troy Harris's book on crypto months ago. Michael Turpin, good friend here, and he is truly called the godfather of crypto. He's moved down to Puerto Rico with a lot of other crypto people because they have a lot of short-term and long-term capital gains, and couldn't be a better place than this. But he has a new book out called Bitcoin Supercycle. So you want to learn more about that, definitely pick up that book. And again, all I can do is keep you updated. I apologize. I'm used to being the clearest guy around, and this is a circus. I mean, I don't know anything else to call it. Never seen anything like this, but governments have pushed this so hard one way. They've created this bubble. The first bubble was natural, just like the Roaring 20s, okay? This second bubble, 100% created by governments. So how do they really have the credibility or ability to fight it if it starts to break up? They're going to lose credibility fast. So again, let's just be safe. And if you're still in markets, be ready to pull out if we see some signs. I'll obviously give warning. I'm still watching Bitcoin, and this is important. This first crash already 108-ish down to 102, a 15% first crash already in Bitcoin. It is the lead dog. I mean, there's other leading indicators, but I am looking at Bitcoin as the #1 leading indicator for stocks and other financial assets. And that's the biggest warning right now, and another reason to be safe rather than sorry. Again, I'll keep you updated.